Warren Buffett is no stranger to people when it comes to the investing world. The Oracle of Omaha is the investing god as well as a mentor for literally everyone who wants to achieve financial freedom through investing in stocks. There are only a few people out there who have the privilege of being acknowledged by Buffett due to their investing decisions. And guess what? The Oracle of Boston, Seth Klarman, is one of those guys who legendary Warren Buffett himself acknowledged as being one of the sharpest money managers out there. So what has made Klarman the apple of Buffett's eye? Well, today we're going to jump into Klarman's investing mind as well as his portfolio so we can break down what the maestro's all about. In this video, we're going to learn about the key components of Seth Klarman's investing strategy, so make sure you watch the video till the end because you don't want to miss out on the hitman from the Baupost Group. Welcome to 5-Star Finance, the place where we teach you how to achieve financial freedom. The Oracle of Boston, president of the Baupost Group, is pretty much unknown to people out there, but his track record is a testimony to his tremendous achievements when it comes to making some serious money. He has made his way into that billionaire lane by investing in that Warren Buffett way, and his firm, the Baupost Group, has grown to manage more than $30 billion in assets. With a reported net worth of $1.5 billion, the alumni of Harvard Business School has made his name by investing successfully in the stock market. After graduation, Seth Klarman stepped into the Mutual Fund Corporation, which was run by value investing guru Max Hine. But the real twist came when he started to work with an adjunct professor, and together they started a firm which was known as the Baupost Group. As we know now, this turned out to be a ride of a lifetime for Klarman. Situated away from the noise of Wall Street in Boston, the Baupost Group has managed an annual return of nearly 20% since 1983, despite holding a lot of its assets in cash. Well, the rule of 72 tells us that assets will double every 3.6 years. 72 divided by 20, and since that is 37 years ago, that means nearly 10 doublings took place with time. 37 divided by 3.6. That also means that $10,000 invested in 1983 will be amounting to an astonishing $8.5 million today. That is what compounding looks like. And let us not forget, this is the mantra of Warren Buffett. But what makes Klarman so successful? What strategies did he follow in order to swing his bat at the right time? Well, let's break it down. Now, Klarman's investing strategy is based on 5 pillars, and the first pillar is the margin of safety, another mantra of Warren Buffett. Buffett, as most of us already know, found this mantra of margin of safety in Ben Graham's book, The Intelligent Investor. As Buffett puts it, the 3 most important words in investing are margin of safety, which also means buying stocks for less than what they're worth, or simply buy stocks on sale. Buy $10 bills for $5 bills. Klarman also wrote a book entitled Margin of Safety, which at the moment is out of stock and read more like an academic text than a New York Times bestseller. To understand the concept of the margin of safety, Buffett uses an analogy to demonstrate what he wants people to learn. When you build a bridge with a supporting capacity of somewhere around 30,000 pounds, you can drive a truck across it which weighs somewhere around 10,000 pounds. You will not dare to drive the truck which weighs even 20,000 pounds across if you love your life. You will surely take a detour from around the city. Similarly, investments made by the margin of safety never disappoint. The next pillar for Klarman's value investing strategies is flexibility. Now, what makes Klarman special in the game is that he has applied his value investing strategies in both public and private businesses. He once said that it doesn't matter if an investment is a public, private, fractional, full ownership, in debt, preferred shares, or common equity. To put it simply, Klarman has always favoured substance over form. Now, the strategy of Klarman and the Baupost Group has always been to strike the sectors where there is less efficiency or less competition, because that means the prices will also be on the lower side. That's why Baupost always jumps into complex securities which are not receiving large-scale attention from other market investors. It's fair to say that Baupost always prefers messy situations which can bring favourable pricing situations for them and thus high profits in the long run using the margin of safety. Let's not forget Klarman's statement that whatever investing success they achieve comes against a troubled backdrop. Another key pillar of Klarman's strategy is a long-term orientation. That means if they're getting high returns from a company by humbling all the reinvestment opportunities, they will hold on to the stock as long as possible. To understand the concept behind the long-term orientation, we need to look into the baseball analogy used by Warren Buffett. In investing, we get as many strikes as we want. We don't need to rush our swing of the bat. Just wait for the appropriate pitch, and when you get it, just throw the kitchen sink at it so you can make the most out of it. But remember that patience is the name of the game. Let's say a business generates a free cash flow of $1 million every year. Its return on capital is 20%, and the business has the opportunity to reinvest annually at the same rate of return. After 10 years of reinvestment and cash generation, the company can generate profits 6 times than what they previously achieved. Many times there are many firms out there that are working with the long-term orientation in mind, but they find clients that are working for short-term instant results, which creates a mismatch and produces subpar performances. Whereas Baupost clients are mainly comprised of endowments and foundations, which mainly have long-term horizons in nature. After getting great returns for their clients, they get great confidence from their clients, and apart from that, Baupost can choose which clients they want and which they don't, which is a key advantage for them. The fourth pillar for Seth Klarman is risk in businesses, which according to Klarman is not beta, as most people on Wall Street believe, but the risk is described by both the probability and the potential amount of loss. Now, this is the same way how a bank would calculate the expected loss on a given amount of exposure. It emphasizes the probability of loss, but the amount you lose is also important. That's why a credit mindset applied to investing is much better than applying the beta and volatility principles. According to Klarman's way of thinking, increased volatility means more opportunities. For a long-term investor, the focus should always be on the business model, not on how volatile the market has become. The fifth pillar in Klarman's investing strategy is absolute orientation. Klarman and his team focus on absolute returns, which means they don't care if they're underperforming the benchmark. As is the case with most fund managers, they often see the clients leaving through the door if they don't meet their benchmarks. The same is not true for Baupost because they focus on absolute orientation. What's important for Klarman is that they can make good investments even if the payoff lies many years in the future. Clients trust Baupost, and it's all about track record. When we talk about Klarman's investing portfolio, his team along with him are very secretive when it comes to what they are buying and holding. But due to certain laws, they have to uncover some of their investing details. What we do know is that Klarman holds securities worth $30 billion as listed in his details. His investments include eBay, Liberty Global, Fox, Viacom, and some other small percentages in his portfolio. Benjamin Graham is the person who introduced the investing world with the margin of safety, and he is termed as the father of value investing strategy. But before you even think of buying stocks, you need to understand the 6 stock categories which will provide you with a competitive advantage over other investors. Check out the video we handpicked for you, and we'll see you in the next one.